I want to get straight over to Phil LeBeau because Delta Airlines just reporting, and he's got the numbers. Phil.
Andrew, take a look at shares of Delta. This is a beat on lowered guidance. Remember, the company warned about Q1 results last month. They cut their guidance. Well, they did beat on the renewed guidance, earning 46 cents a share versus the estimate. And again, remember, these have been brought down substantially over the last couple of months of 38 cents a share. Revenue coming in slightly below expectations at $2.98 billion. Q1 margin of 4.6%. The street was expecting 4.3%. Revenue per seat mile is down 2% compared to Q1 of last year. Free cash flow of $1.28 billion, below the $1.37 billion in the first quarter of last year. And here's the part that's going to be the reason you see shares of Delta under pressure. Delta is saying that the outlook, and these are their words, outlook says the growth has largely stalled. And that's reflected in the guidance for the second quarter and the rest of this year. Q2 EPS guidance of $1.70 to $2.30. The street going into this morning was at $2.30. Operating margin of 11 to 14%. The street was at 14.6%. Q2 revenue could be negative 2% to positive 2%. The street's expecting 1.9%. As you can see, everything is below what the street is expecting here. Second half capacity, flat is what Delta is expecting. Previously, it was planning on capacity growth of 3 to 4% in the second half of this year, and it is also pulling its guidance for the full year. I want you to think about this. Just a couple of months ago, we were here in Atlanta. We talked with Ed Bastian. He was forecasting record profits for 2025. Now they are pulling their guidance largely because of the uncertainty in the economy, what they are noticing with their forward bookings, what they're noticing in terms of demand going into the summer, both corporate as well as leisure. We'll talk with Ed Bastian about this, and more importantly, about what he's hearing from other CEOs, from other executives in terms of the economy. This is really our first snapshot of the consumer since the tariff trade wars really exploded a couple of weeks ago. That's coming up a little after 7 o'clock. Guys, back to you.
Hey, Phil, very quickly, watching the reaction in the stock, this is all bad news, worse than the street was expecting, but the street kind of knew that this was coming. These stocks have sold off pretty significantly. The last I saw, stock was indicated a little higher, 35.88. Okay, it's hard to say exactly where it's going to open. It closed at 35.88 yesterday.
100% right, Becky.
But these stocks have sold off because everybody knows that there's some big problems and that these are going to be the canary in the coal mine, I think, is what Larry Fink was saying, that he'd heard from a lot of these airlines. One of them described themselves as the canary in the coal mine, and the canary is sick. Stock market reaction for all of these stocks reflects that over the last week.
And it's not the numbers, certainly not the numbers for the first quarter, though that reflects the uncertainty that really kicked in the month of March. Right. But it's the guidance and it's the uncertainty. We'll talk to Ed Bastian about this. I've had discussions with Delta executives and other executives in other airlines. Everybody says the same thing. We cannot forecast an expectation of growth or limited growth given what we're seeing with booking trends. And so this is the first chance to hear from a CEO who can talk about that.
Phil, I'm confused on one component part of this is because we had a conversation, you and I and our audience, about a week and a half ago. We were talking about Canada, if you remember, and there were a whole bunch of numbers that we were talking about in terms of whether Canadians were still flying to the U.S., whether they weren't flying. There was a lot of speculation that they weren't going to be flying. I think some of the numbers that you had suggested actually that was not the case. Is that the case?
We'll find out when we talk with Ed. We'll get a more, granular view of what's happening with travel, Canada to the U.S., Mexico to the U.S. I can tell you that a couple of weeks ago, the industry, Andrew, and that's when we did that report, there had been all of these stories out that nobody from Canada is going to come to the United States. Well, the schedules that were put out, and that's what we based the report on, the capacity showed there was only a slight decline in the number of planned flights from January to March, and that's when you were looking at April and May bookings. That may have changed within the last few weeks, that you really start to see a drawdown in traffic. But we'll talk with him after the top of the hour about that.